Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Deals or tariffs? President Trump says he'll be sending out letters to various countries around the world from midday Eastern time today. In a warning shot, Trump also threatens an additional 10% tariff on any country aligning with BRICS, quote, anti-American policies. And OPEC Plus surprises. Oil falls after the alliance agrees to a bigger than expected production hike in August, raising concerns about oversupply. Well, it has just gone 8 a.m. across the Emirates. I'm Johanna Versace in London today, and most days this week I'm actually going to be heading over to Vienna tomorrow after the show to be covering the OPEC seminar. And of course, OPEC Plus, major topic of discussion that we're going to be focusing on throughout the course of the show today, with that larger than expected putback of barrels announced over the course of the weekend. On the back of that, you are seeing oil coming off a little bit, but also it is a major week as far as that tariff deadline is concerned. July 9 is Wednesday. That was supposed to be the original deadline for that 90-day pause that we spoke about a couple of months ago. But over the weekend, Treasury officials have also started talking about August 1st, i.e. maybe there are a few more weeks for countries to get deals with the U.S. over the line. So maybe that deadline has actually shifted towards August the 1st, away from Wednesday. But take a look at markets this morning. You've got S&P futures leaning towards the red, down 0.3%. And of course, this is coming off record highs. July 4 was a holiday, as you know, in the U.S. for Independence Day. But still, these markets keep going from strength to strength. The handover from Asia, pretty negative as well. European markets not doing a whole lot. And I would say for European markets, also keep an eye out, not just on the deadline that's coming up this week with the U.S., but also the tit for tat that's going on between EU and China right now, with the stakes also there moving a lot higher, and the potential for some tariff and non-tariff barriers being applied between those two economic giants too. So something to bear in mind. The USD this morning slightly firmer, up about 0.1%, 15 basis points is what we're looking at. And then Brent just shy of $68, down 0.7%. I kicked off the show talking about OPEC Plus and the fact that the group of 8 have decided to put back barrels to the market faster than what had been anticipated, and in all likelihood will end the full voluntary cutbacks by September of this year if they continue with this pace. That's 1 year sooner than expected. The reaction in the market slightly negative, albeit mildly so, down 0.7%. All right, let's also check in on how markets in Asia are faring. Avril Hong is in our Singapore studio. How is the setup going into this pivotal week for markets, Avril?
Yeah, it's a decline at the start of this trading week, Jumana. I mean, we have not a lot of risk appetite. The region's benchmark declining by the most in 2 weeks. The drags are the likes of TSMC as well as Samsung Electronics. You had reporting as well that the Malaysians or the Thais could face some AI chip curbs. So the benchmarks in those countries are also underperforming in the region. But overall, even though you have a sense that there's more time for negotiation, given how the deadline sort of been extended to August 1st for some countries, that will give the likes of Japan and South Korea more time for talks. Some of our MLive strategists actually highlight an interesting point in that this will actually be an added concern, given how then that would run into the next Japanese earnings season. Obviously, there's not a lot of risk appetite in the region today, including among some of these Japanese banks. Keeping an eye on dollar China as well, that had seen a knee-jerk reaction higher on Trump threatening higher tariffs, additional tariffs on countries that are aligning themselves with BRICS. But that's not expected to last, given the signals that we've been seeing from the PBOC. They want continued strengthening, stable path for the renminbi in spite of the geopolitics of the day. Jumana.
Avril, thank you so much. Yes, a lot of tension in the air. Avril Hong in Singapore. Now, nations are scrambling to secure trade agreements with Washington or lobby for extra time ahead of Wednesday's deadline. President Trump says he will send out letters about tariff plans starting on Monday.
We'll be sending letters out on Monday having to do with the trade deals. It could be 12, maybe 15. You know, Secretary of Commerce right here. And I guess, Howard, I would say it could be maybe as many as 15 or so. And they'll be going out on Monday, and some will go out on Tuesday and Wednesday, and we've made deals also. So we're going to have a combination of letters, and some deals have been made.
Okay, so lots of letters are going to be sent out this week. For more, let's bring in News Desk editor Jill Deesis. Okay, it is a big week for markets, obviously. Wednesday was supposedly the deadline for that 90-day pause, but over the weekend we heard the likes of Howard Lutnick, the Commerce Secretary, talk about the actual tariffs being implemented on August the 1st. So is it fair to say that countries who have not signed up for a deal yet have won a few weeks and that the deadline has actually shifted away from this Wednesday to August the 1st now?
Well, Jumana, first of all, I'd point out to you that unless you're the United Kingdom, I don't really think we've got concrete details on a whole lot of other details anyway. So that's pretty much every country. I mean, Vietnam, Trump said that they signed an agreement last week, but we still haven't seen a term sheet for that one. I think the Trump administration is trying to fudge this deadline a little bit. They've still said that, the July 9th deadline holds, but, it's really that August 1st day is when these tariffs will be implemented. I think what you're seeing on your screen right now is a couple that we're keeping pretty close watch on. Japan is a really big one. I'm not sure how close they necessarily are to a deal, though. A big sticking point, despite the fact that the trade negotiator has been in Washington repeatedly, is that they're really worried about those auto tariffs, those 25% auto tariffs impacting their automotive industry. That's something that's under this sectoral rule that may be a little bit difficult to really work around. And Trump has kind of indicated that he doesn't necessarily want to remove those sectoral tariffs. You also have India, which has been really actively trying to negotiate a deal. Maybe we get something there. Outside of that, we did have Cambodia say within the last couple of days that they've worked out something of an agreement with the United States. But again, don't have a ton of clarity on what that looks like in terms of term sheets or anything like that. So that's one to look out for. And then, what we've heard from Thailand is that they've also been pretty aggressively trying to pursue something. That's just kind of a look in Asia. Obviously, really on the lookout for any other deals with other places such as the European Union. But I think what this is really telling you is that when you've got the Trump administration, sort of actively, it seems, in negotiations with some of these countries, but then you've also got Trump just saying, well, we'll just send out letters. It's really difficult to tell, how a lot of this is ultimately going to be resolved, if we are going to get anything by July, if it's going to, dip out into that August 1st deadline. But I guess we'll just have to see.
Yeah, and the latest is President Trump is also threatening to slap an extra 10% tariffs on BRICS nations. So how is that also going to be factored into the negotiations and perhaps be included in some of those letters that are being sent through?
Yeah, I mean, that's another one, obviously that we're looking out for. So those BRICS countries, including Brazil, India, China, all meeting in Brazil this week. They've put together, they're expected to put out, a statement kind of, against a lot of the Trump tariffs. What we've had so far is, Trump signaling that extra 10% tariffs. I will say that that's quite a downgrade from, I think earlier he was threatening 100% tariffs on BRICS nations, if they were to push ahead with anything that would move away from dollar, sort of like the dollar supremacy and such. I think what we're hearing from Trump so far is that he singled them out as having policies that are anti-American, though it's not entirely clear what he's looking at in there. I think that again, sort of like the U.S. dollar status as sort of the global reserve currency is part of that. But again, I think we'll just have to kind of see how exactly that's going to factor in. We already know that Trump has, something of a deal with China. Remember, China wasn't part of this whole reciprocal plan anyway, so that's a bit separate as it is. But I do think that it's kind of worth keeping an eye on what that ultimately may mean for India, for example.
Yeah, big week. Bloomberg's Jill Deesis, thank you for giving us the contours of what to expect. But now let's talk about markets and the market reaction and bring in Rashmi Garg, a senior portfolio manager at Dhabi Capital. Rashmi, do you think markets will read the reference to August the 1st as a potential extension to this deadline, i.e. will it provide a bit of reprieve to investors, do you think, this week?
Hi, Jumana. So yes, I think the August 1st is a new thing. Earlier, July 9 was supposed to be the final deadline. So clearly there is a bit of kicking the can down the road. And that is something that gives a little bit more time for negotiation. So I think markets will be volatile. We did expect, volatility, especially after the strong run that we've had recently going into this July 9th deadline. And again, I mean, we are we are getting new pieces of news every second from Trump. For example, the threat to the BRICS nations, the letters. So I think the environment remains very uncertain. But yes, definitely there is a bit of reprieve from this August 1st announcement.
Yeah, I was reading a comment earlier about Taco Tuesday, and of course, that is in reference to the fact that in the end, either the deadline gets extended or the administration finds a way to fudge the deadline and to move it away from the more onerous terms that Trump had been threatening. Do you think that we are in a similar situation today and that investors are less fussed this time around simply because there is a precedent for these deadlines moving?
Yeah, I do tend to agree with that, Jumana. So see, what has happened is, like, even if we see the last couple of months, what we saw was that markets were not really moving on tariffs as much. I mean, they had decided to look through tariffs and really focus on other stories, on valuations and, earnings and things like that. So, and there is this understanding that, whatever Trump is saying, it is not written in stone. There is always some sort of a reprieve. There is always some concession that happens. So I think, yes, that clearly, I mean, nobody expects that we will get everything in final form on July 9th.
Rashmi, I want to ask you about markets because S&P once again at record highs, similar for the NASDAQ. And yet, if you drill down into what's driving this performance, the tech sector is up almost 40% since April, but it's not the same for other parts of the underlying portfolio. So if you look at industries like healthcare or some defensives, they've actually underperformed the index. Do you think from here onwards, we're going to continue to see leadership met by those handful of tech stocks that have so far driven so much of the performance in U.S. equities the last couple of years?
So, Jumana, you're right that the market breadth has been very narrow, and we've seen that, it's really largely tech, semiconductors that have driven the market, in the last couple of months. Now, I think there are a few factors which will influence the market breadth going forward. First of all is, what do we ultimately get on the tariffs? I think this is something that, impacts certain sectors more than others. And I think that is something that is going to impact the performance. The other thing is on the interest rate trajectory. Now, already we saw that, earlier we were seeing some sectors which would be positively impacted by interest rate cuts rallying. But then after we saw the NFP data, we clearly saw that the July rate cut is off the table and those sectors became a bit subdued. So I think this is another thing that is going to, impact the sector performance within the S&P. But apart from that, eventually we do expect that there will be a bit of broadening of the S&P. There are certain, structural themes that continue to play. For example, AI has clearly proven that it is not a fad. There is something happening in the economy. There is actual capital spending and changes happening in the economy. So we do remain with that theme. But we also, like financials, which will be beneficiaries of deregulation. In general, the fiscal the big, beautiful bill that we've seen that will have a positive impact on certain sectors. So we do expect that there will be a bit of broadening of the S&P.
Yeah, and I'm glad you brought up rate expectations after that NFP print. It seems as though July rate cut firmly off the table for now. Rashmi Garg, Senior Portfolio Manager at Dhabi Capital, thank you so much for joining us. Well, coming up, OPEC Plus surprises markets with a bigger than expected production hike. We discuss the move and the impact to supply next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersachi in London. Oil falling this morning after OPEC Plus agreed to boost production by more than 500,000 barrels per day in August. The bigger than expected hike has surprised markets and raised concerns of a glut, just as U.S. tariffs spark worries about the demand outlook. For more, we're joined by Anthony DePaula, our Middle East energy reporter. So, Anthony, yet another surprise from OPEC. They keep surprising us the last couple of months, and this time an even bigger than anticipated supply putback to the market. What is the justification from their perspective?
Good morning, Joanna. Nice to see you from London. Yeah, that's right. It was another surprise increase because OPEC had signaled going into this stretch of increases that they would be putting on to the market just a little bit more than 100,000 barrels a day. But for the last 3 months, they've been doing more than 400,000 barrels a day. So they've really put 3 months into one in terms of increases over the last 3 months. The market was expecting that. Also in the decision that they took on Saturday, which is for August production. Instead, they've come up with, again, as you said, over 500,000 barrels a day of increase there. So 4 months rolled into one. They're saying that there's still demand in the market. In fact, we are seeing a lot of demand for transport fuels because of the summer, because of summer burn in the Northern Hemisphere, where people are driving, people are going on vacation. So we are seeing that demand, particularly in fuels like diesel, like gasoline, and that's supporting the crude prices. But what is the issue going forward for OPEC is that the market traders, analysts, market participants are forecasting a glut towards in the second half of the year. So towards the end of the year, we will be having prices going down. Some of the big investment banks like Goldman Sachs are forecasting prices at or below $60 by the end of the year. So we are seeing this glut building, and this OPEC increase, this bigger than expected OPEC increase, is going to add on to that. Plus, we've got some initial signals coming out from OPEC that in September, they will do a similar move. So that would really unwind this group of voluntary cuts that 8 members have taken that we're talking about here, Jumana.
Anthony, when OPEC Plus put out that statement on Saturday, they referenced a steady global economic outlook, healthy market fundamentals, and low inventories, which of course, it is contrary to the expectations of the market that by the end of the year, you're going to start seeing those inventories build up. But there's something else that caught my attention yesterday. Aramco's official selling prices, those OSP prices, actually increased to all regions around the world. What does that tell you about how Saudi Arabia is feeling about demand?
Yeah, it shows that they're really confident about demand, that they're really bullish, and that they think it'll be supported. Because we're looking mainly at Asia when we look at that, because that's where most of the Saudi oil goes. And that increase was they charge a premium, and that premium increased by $1 for the main crude grade that goes to Asia, and that was more than expected. So that's a hefty hit for some of those refiners there, because they were expecting, yes, an increase, but less than that. So that's going to be added cost for them going forward. So when we see Aramco increasing at the same time as OPEC Plus is putting more oil into the market, that's a really bullish signal that they are really confident about the market. They're confident about demand, and they're confident that the market can take this up. Right now, we do have those good refining margins for the refiners, so they're able to take that oil, refine it, sell it as fuels, and make some money. But again, that prospect is going to weaken going into the second half. This is also compounded on last month's OSP decision for Aramco, which was also an increase, and also, it was a cut, but it was a cut that was smaller than expected in the last month. So the traders and the refiners in Asia have really been kind of hit by a double whammy of these 2 consecutive stronger than expected price decisions and added production. So it's a really a difficult situation for them to navigate, and we are seeing that weakness coming through later in the year, as we said, Jumana.
Yeah. Anthony, thank you so much for the overview. Big topic, of course. Anthony DePaula, our Middle East energy markets reporter, and we will be picking up the discussion as well later on in the show with our guest. Now, coming up, President Trump is set to meet with Benjamin Netanyahu as an Israeli delegation arrives in Doha in a bid to restart talks on a Gaza truce. We are live in Jerusalem next. This is Bloomberg. Israeli delegation is in Doha to restart talks with Hamas. That's after the militant group said it was ready to negotiate on President Trump's proposed 60-day ceasefire in Gaza. Israeli Prime Minister Benjamin Netanyahu is due to meet Trump in Washington later today. Now, let's get out to Jerusalem and speak to Bloomberg's Dan Williams. Dan, so President Trump seems to be expressing optimism about the prospect of a Gaza truce being agreed to perhaps as soon as this week. Some positive signals coming through from the Israeli side, Hamas potentially as well, that they're looking perhaps for other terms. What is the likelihood that we actually do get a breakthrough this week?
Good morning, Jemana. Well, today is exactly 21 months since this Gaza war began, a war that spilled over into other fronts, in fact, culminated in an unprecedented Israeli-Iranian war last month. And I think part of Trump's optimism is given Israel's gains in that war against Iran, gains that were supported, assisted by the United States, famously with those U.S. strikes on 3 Iranian nuclear sites. His thinking is, and this has been shared by Israel, that shorn or perhaps with a reduced Iranian support for Hamas, Hamas's isolation might be especially felt in Gaza, among the Hamas delegation in Qatar, and the group may feel this is time to cut a deal rather than to pursue this war. Keep in mind that its ally Hezbollah was also blunted by Israeli forces last year. Syria under President Assad has also been transformed by this war. So really this axis has been weakened. However, it has to be said that Hamas, at least publicly, does not appear to be relenting on its core demands. And in fact, Israel says demands it has issued for a ceasefire, the proposed ceasefire, not for the end of war deal that Trump would like to see evolve from the ceasefire, may even complicate chances of achieving that ceasefire. We should find out more today and as the week proceeds.
There's also been quite a lot of chatter into this meeting that's scheduled to take place in D.C. later today, but also in the run-up to it, about the potential for other Arab countries to join the Abraham Accords, Dan. And I do wonder whether there can actually be progress on that front, given that the situation in Gaza is still not resolved.
Well, Trump was very proud in his first term to have shepherded those accords, and he would like to see them expanded, as would Israel. The obvious candidate, the jewel of the crown, if you like, of those accords would be Saudi Arabia. But there's an inbuilt irony here, because Saudi Arabia is widely perceived to have been interested in those accords due to its shared threat perception with Israel, a threat perception when it comes to Iran. Now, if Iran's capabilities have been blunted by Israel and the US, it would appear Saudi Arabia has less of an incentive to get into those accords. And certainly the Saudi leadership have been speaking very firmly about the need to end the Gaza war and worry about the humanitarian situation. So there's some talk of Syria actually being an alternative.
Bloomberg's Dan Williams in Jerusalem. Thank you so much. When we come back from the break, we're going to be discussing more about that OPEC Plus bigger than expected production increase. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Deals or tariffs? President Trump says he'll be sending out letters to various countries around the world from midday Eastern time today. Warning shot. Trump also threatens an additional 10% tariff on any country aligning with BRICS, quote, anti-American policies. And OPEC Plus surprises. Oil falls after the alliance agrees to a bigger than expected production hike in August, raising concerns about oversupply. Well, it has just gone 8:30 a.m. across the Emirates, 5:30 a.m. over here in the UK. I'm Joanna Versace in London this week. Let's get you up to speed on markets as these stock markets returning back from July 4 holiday, digesting the big news to come this week on tariffs-related deadlines, July 9 being the presumed deadline for the 90-day pause. But over the weekend, Trump officials have spoken about August 1 actually being the date where many of those reciprocal tariffs will get implemented. implemented. So perhaps markets can buy a couple of weeks from here onwards. But the handover from Asia, mostly negative. We'll talk about that in a second. S&P futures slipping marginally this morning, down 0.3%, though coming off all-time highs. European markets as well, keep an eye out later today, trading flat. But of course, there not only is the European bloc thinking about the potential for a deal with the US, but also the tit for tat with China, the language and the rhetoric between the two deteriorating over the course of the weekend as well. So something to watch out for from that perspective. USD saying a bit of a bit this morning, up 14 basis points, but still very negative on the year. The dollar tracking 9% weaker. And then Brent down 0.6%, trading just below $68 this morning as the energy markets also come to terms with the bigger than expected OPEC plus increase in production that was announced over the weekend for the month of August. And they are on track to bring back pretty much all of those voluntary cuts that were introduced a couple of years ago as soon as September of this year. So much faster putback of these oil barrels to the market than what had been envisaged a few months ago. And yet Brent is still trading very close to $68. All right, let's check in on how markets in Asia are faring this morning as well. Avril Hong is in our Singapore studio. Avril, walk us through what you're seeing today.
Yeah, Jumana, in terms of stocks, we're seeing the region's benchmark declining by the most in 2 weeks. Traders don't seem terribly convinced about how this August 1st deadline is a sort of extension, given the lack of clarity on Trump's tariff policy path. And we're also seeing not just stocks under pressure, it's also filtering through into Asia currencies. And you can see here the Asia dollar index, which tracks the currencies in the region, excluding the Japanese yen, a very clear reaction to Trump's Truth Social post about how there could be additional tariffs for countries that are considering aligning themselves with BRICS. And indeed, some of the strategists at StoneX have highlighted that this is seen as a sort of warning shot for EM countries that might be thinking of such alignment. And amid all this, traders don't see, the need or the want to put on fresh active positions. So a lot of pressure coming onto currencies as well. It's interesting, of course, that the renminbi is part of the decliners in the region today. But given the signals we've been getting from the PBOC that want for a firmer renminbi, this knee-jerk reaction you're seeing in dollar renminbi might not last. Jumana.
Avril, thank you so much. Let's go back and talk about energy markets. Oil prices are lower after OPEC Plus agreed to a bigger than expected production increase next month, raising concerns about oversupply, just as U.S. tariffs fan fears about the demand outlook. Joining us is Yousef Alshammari, president at London College of Energy Economics. Yousef, another surprise from OPEC Plus over this weekend. In the press release, they talk about a global economic outlook that looks steady, healthy market fundamentals, including low inventories, as justification for bringing those extra barrels to the market. The question is, how long do those market fundamentals actually look solid and strong enough to support the extra supply that is coming out of OPEC?
Good morning, Jumana, and thanks a lot for having me. Well, I believe for the next couple of months, I believe the group could be comfortable with bringing back these barrels, because literally, if you look at when the markets opened this morning, they were only a drop by from 1 to 2% on both Brent and WTI. And the reason is we're not going to see actual increase from what has already been brought to the market. So essentially, what they are doing is they are offsetting the non-compliance or the conformity levels that many producers have been actually falling behind. So, and of course, here there are two factors supporting the narrative. Number one is the driving season in the Western economies, and also the rise in oil demand in the Middle East, especially for electricity generation. It's the hot summer season. So I believe much of that increase is not going to be translated into export. Also look at the OSPs, the Aramco selling a price this morning. They continue to hike prices. So that also indicates that we are seeing a strong demand, especially from Asia.
Yeah, but Yousef, this isn't just about the demand outlook, but also seems to suggest somewhat of a change in strategy from OPEC Plus as well. How much of a motivation do you think it was for the group to regain market share, especially having held back production with so many countries, the likes of Saudi Arabia, UAE, sitting on spare capacity that they haven't been able to supply to the market the last couple of years?
Well, I believe here there's the tricky question is when we come to the discussion of baseline. So the UAE now is going to have more of baselines, especially as we go even for the last hikes. That can be something like 300,000 barrels. So I think we're going into Q3 and Q4. I believe it's because the fundamentals may not be strong enough, and we start to see a buildup in inventories. Then I believe defending the market share over the especially towards the end of 2025 and beginning of 2026 might not show to be the right strategy. But for the meantime, I think it's about the shale oil production, because look at the latest reports coming from the EIA that the U.S. the production is down by something like 100,000 barrels. So I believe over the next couple of months, the strategy might be working. But over the long term, I think we might need to see a change in strategy whereby we see a group taking more of a pragmatic approach in order to keep production or for the prices within reasonable level for many producers that may need the prices to support national budgets with around $60. I believe prices continue to fall down to the $50. I believe that many producers will suffer.
Yeah, but people always forget that there were two sets of voluntary cuts that were introduced. So we're coming to the end of the unwind of the first set of voluntary cuts, but there's also another about 1.6 million barrels per day that are also set to expire at the end of 2026. Given what you said earlier about the market being able to, quote, semi-digest the extra barrels that have already been put back, do you think the discussion within the OPEC Plus, within G8, will now move towards the secondary or the second basket of voluntary cuts that are set to expire by end of 2026?
Well, we cannot exclude that possibility, Jumana, but I think it's very tricky because bringing back the Group 8, the first level is kind of was much easier because we're on a very high demand season. But going into Q3 and Q4, I believe because it's already a low demand season, and when we start to see a build up in inventories, then I believe the group will ultimately decide to relay that until maybe until summer 2026, when we see a stronger demand signals coming up before they decide to hike demand going into level 2 or level 3. Effectively, they are in place until the end of 2026. So I don't think it's the right strategy to bring them back when the demand season is low, especially in Q3 and Q4 this year.
Yeah, makes sense. I got to see what happens with that inventory buildup towards the end of this year. Yousef Alshammari, President at London College of Energy Economics. Thank you. A pleasure having you on. Now, Rwandan President Paul Kagame has praised a U.S.-brokered peace deal with the Democratic Republic of Congo aimed at ending a 3-decade conflict. He affirmed Rwanda's commitment to the agreement, but warned of repercussions if Congo fails to neutralize the FDLR, a rebel group Rwanda views as a threat. For more, Bloomberg's Ondiro Ganga joins us now from Kigali. Ondiro, Kagame has some issues with the deal. He believes Congo won't actually live up to its commitments.
Absolutely, Jumana. This is a case where he believes that if we give the Democratic Republic of Congo a stretch, they're going to run a mile. He has very little trust in the administration of President Felix Tshisekedi, and he has maintained that if FDLR is not neutralized, then Rwanda will keep doing what it needs to do. And that is translation for they will keep maintaining an offensive and defensive posture, particularly along the border if FDLR remains active and remain a threat to Rwanda. This is something that he has made very clear. This is a stance that he holds. And he says that Rwanda does not need permission from anybody to protect its people, to protect its territory, and also to protect its borders. But the feeling is mutual when you go across the border. It's not like Rwanda falls in the fan favorite category when you go to DRC. The eastern part has been destabilized for nearly 3 decades. 6 million people have been displaced from their homes. Hundreds of thousands have lost their lives. So Rwanda is not necessarily one of their favorite countries in the world. And the Minister of Foreign Affairs puts it into perspective for Bloomberg, saying that trust is far off, irrespective of the fact that Rwanda does not trust the country equally does not trust them. What is important at this point is accountability in the sense that Rwanda is held to account, particularly over its support for M23, according to a UN experts report, and also the fact that they are going against their sovereign and territorial integrity, and also being involved in smuggling of minerals, allegations that the president of Rwanda and the government has vehemently denied. And now we have a case where President Paul Kagame says that this is not an issue, it's politics and it's security, while DRC is reading from a completely different script and saying that minerals are key, part and parcel, front, center, and back of this deal.
And yet, President Trump keeps pushing the diplomatic channels. Both of the leaders have been invited by Trump to the White House.
Absolutely, and we're seeing the U.S. taking this seriously. Even before the leaders were invited, we saw the foreign affairs ministers in the White House doing a briefing with President Donald Trump after they had signed this deal, to mean that the U.S. is dipping not only its toes, but all the way to its knees into this issue. And they're very, very interested. And it's so interesting because this started as a letter by President Felix Tshisekedi to the U.S. saying that in exchange for minerals, we'd like security from you. And now we are seeing it evolve into a fully pledged peace deal. The question is, will both sides adhere to what they've agreed to in the peace deal, and will US be able to stop smuggling of minerals in the region and also maintain peace in the region? This is a good deal, particularly for the US, because Congo is a very rich country. It has large reserves of minerals such as cobalt, copper, which are essential for green revolution. They have tin, tantalum, tungsten, essential for technological advancements. So the interests of the US are catered for here. The big question is, are the interests of Rwanda and are the interests of DRC catered for here? So President Donald Trump has a big task ahead of him, ensuring that both leaders show and both leaders stick to their word.
Yeah, absolutely. But at least some progress has been made. Bloomberg's Sandir Okanga, thank you so much. Now for a look at some of the other stories we're following today. Iran's Supreme Leader Ayatollah Ali Khamenei has appeared publicly for the first time since the 12-day war with Israel began last month, according to Iran's state media and his official website. After weeks sheltering in a bunker, Khamenei attended an annual Shia religious ceremony held at his compound, the New York Times reported. Khamenei did not address the crowd, which appeared surprised by his appearance. Elon Musk says he has formed a new America party after President Trump signed a tax cut and spending bill that he's repeatedly denounced. Musk made the announcement in a post on X after 65% of respondents to a poll on the platform backed the idea. Musk has ramped up criticism of the bill, which will end a popular EV tax credit this year. Rescuers in Texas are still searching for at least 10 children and a camp counselor missing after catastrophic flash flooding. The disaster killed more than 70 people, including many children attending youth camps over the holiday weekend. Officials are struggling to explain whether they did enough to warn people of the fast rising waters. It is feared the casualty count will climb with more heavy rain forecast in the coming days. And coming up, the Middle East is awash with capital from sovereign wealth funds and family offices, but startups are finding it increasingly hard to access late-stage funding. We tell you why next. This is Bloomberg. Despite a strong first quarter for startup funding, the Middle East venture ecosystem faces a unique paradox. The region's sovereign wealth funds and family offices wield trillions of dollars, but startups are struggling to access the funding they need to scale. Laura Gardner-Cuesta is Bloomberg's Middle East equity capital markets reporter and joins us now. Laura, I've got to say, this is I would say, a surprising observation, because we always talk about the region being awash with capital from the likes of these sovereign wealth funds, these family offices. So why is it the case that for some of these startups, it's difficult to get late-stage funding?
Yeah, no, absolutely. It's something that you wouldn't initially think about, but we interviewed a few VC funds and companies based in the region, and they noted that there's a funding gap at the late stage, so Series B onwards. And there's a few reasons they cited. One of them is that, yes, there is a lot of capital in the region, but there's also a lot of demand for this capital. So we've seen sovereign wealth funds invest in regional allocators, but it's still comparatively small compared to other global investments. There's also been a pullback of international funders in recent years. So there was a peak in 2021, 2022, but this has since pulled back a bit, and they're more focused on things like tech, AI, and a lot of this is in the US. So this means that there's less going around for Middle Eastern companies. And finally, there's also a lack of exit options, or rather exit track records, because yes, we've seen a wave of IPOs in the region, but a lot of this has been from either state-backed companies, or we've also seen a lot of long-standing family-run businesses. We're yet to see a wave of startup IPOs, if that makes sense. So that also gives investors a bit of concern, like whether their money is going to get stuck. So yeah, I think it's a combination of things. Sure. Yeah,
that is interesting. Obviously, exits are trickling down across the whole landscape. What would you say the risks are for the Middle East venture capital ecosystem if that funding gap, specifically at the Series B stage and beyond, is not addressed?
So, I mean, I think, again, speaking to companies, it doesn't mean that not accessing the Series B funding means that you won't be able to IPO in the Middle East. But we spoke to Property Finder's CEO, and he said one of the concerns he had is that it might not, essentially, companies that are getting ready for an IPO, getting ready for an exit, if they don't have this access locally, it could just stunt this growth and development. So I think there is a risk there in general. We are seeing signs of change. There's recently been an announcement by Dhabi Capital that invested in that's known for Series A funding. They've started a new fund for later stage capital. We're seeing some new players come into the market. So Riyadh Capital recently announced they led a round for quick commerce firm Ninja in Saudi. So we're seeing this change. We're seeing some funds being announced, but it's still, it's going to take some time. So I think ultimately, what it means for the companies, look, if we really want to see a wave of startup IPOs in the Middle East over the next 2, 3, 4 years, we're going to have to, well, it will be more helpful if you have this capital locally.
Yeah. Fascinating. Laura Gardner-Cuesta, Bloomberg's Middle East Equity Capital Markets reporter. Thank you so much for bringing us the latest there. And for more of these stories looking into the intersection of wealth and power in the region, sign up for our Mideast Money newsletter on Bloomberg.com. And coming up, President Trump threatens fresh tariffs on nations aligning with BRIC nations. We'll find out why. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in London. Let's take a look at how markets are faring, starting off the week after July 4 holiday with a slight risk-off tone. As you can see, S&P futures down about 0.4%, so the loss is accelerating throughout the course of the last hour. NASDAQ also down a similar amount. This as we head in to that tariff deadline on July 9. Remember, that was the end of the 90-day extension that the Trump administration introduced a couple of months ago. So we are heading into a big week in terms of whether major countries around the world will actually come to the table and sign deals with the US, and indeed whether there's actually enough time to get these deals passed. So big questions there, and that's really setting the tone for markets this week. But on the subject of tariffs, President Trump says he will put an additional 10% tariff on any country aligning themselves with what he calls the anti-American policies of BRICS. The threat comes as BRICS leaders condemned U.S. and Israeli attacks on Iran. Let's bring in Bloomberg's government reporter, Sudhi Ranjan Sen. So this headline just came through a couple of hours ago. What do we know about what President Trump is threatening to do, specifically what policies he's referring to when he refers to the anti-American policies of these BRICS nations?
Well, to begin with, I mean, there's not much clarity as to, what exactly President Trump is, terming as anti-American policies. But if we go back in the past, we've seen the American administration and President Trump's administration in particular very, very jittery about BRICS and its, intentions and what it wants to do. We have heard earlier statements from President Trump when Prime Minister Modi was visiting on BRICS, saying that BRICS currency is not going to allow a BRICS currency to come, to come about in any sort of way. So there is the sense, a tension that is there with America discouraging the developing countries or, countries of the South coming together, led by China, Russia, and India, and that is to kind of keep the dominance of the American system, the dollar, intact. And that is where, one would guess this announcement coming that, there would be additional tariffs on any country aligning with anti-American policies and that of the BRICS.
Yeah, I've got just about 40 seconds, but did the BRICS countries have anything to say at the end of their weekend meeting?
No, we've not heard any reaction from after President Trump's announcement on the tariffs. But the declaration of the leaders is very clear. They've condemned Israel, gone in favor of Iran, which is quite stands out, so to say. So it looks like there is a new collision course or a new kind of area where the U.S. and the other countries, the BRICS countries, are going to stand off.
Yeah, political in nature. Bloomberg's Sudhi Ranjan Sen, thank you so much. Well, going to end the show taking a look at how oil markets are faring after that OPEC Plus decision of the weekend. That was it for Horizons.